Hey everyone, welcome back to the channel. I'm Divya Grover. Today we are going to talk about one of the prominent players in the Indian mutual fund industry, DSP Mutual Fund. DSP Mutual Fund was established in 1996 and is backed by the DSP Group, which has a legacy of over a century in the Indian capital markets. For several years, it operated as a joint venture with global investment firm BlackRock under the name DSP BlackRock Mutual Fund. In 2018, DSP acquired BlackRock's stake and rebranded itself as DSP Mutual Fund. Now, when it comes to investing, DSP follows a philosophy centered around long-term investing, maintaining discipline even during market volatility, and focusing on quality businesses to reduce downside risk. As of 28 February 2026, the fund manages assets worth Rs 2,322 billion across categories like equity, debt, hybrid, commodity, and international funds. In this video, we will be looking at the top 3 equity schemes from DSP Mutual Fund. These schemes have been shortlisted based on a combined quantitative score that includes rolling returns across 6 months, 1 year, 3 years, and 5 years, along with risk-reward ratios like standard deviation, Sharpe, Sortino, and up-down capture ratio. Let's start with the first one, DSP Value Fund. Launched in December 2020, this fund invests in a mix of Indian and international companies with up to 35% allocation overseas, but importantly at reasonable valuations. The fund uses quantitative filters along with fund manager inputs to build its portfolio. Interestingly, it sometimes maintains higher cash positions to reduce downside risk and reinvest when valuations become attractive again. It also has a portfolio turnover ratio of around 120%, which indicates some tactical positioning. Now coming to the performance, over the last 5 years, the fund has delivered a CAGR of 16% compared to 11.8% by the Nifty 500 TRI index. It has also shown lower volatility and better risk-adjusted returns as reflected in its Sharpe and Sortino ratios. As of February 2026, the allocation stands at 43.7% in large caps, 9.9% in mid caps, and 11.8% in small caps, along with 13.3% in overseas equities. Its top holdings include HDFC Bank, Bharti Airtel, and L&T. On the international side, it has exposure to companies like SK Hynix, Sony, Microsoft, and Amazon. Apart from this, it has also invested in overseas mutual funds like Harding Loevner Global Equity Fund and WCM Global Equity Fund. Sector-wise, it is tilted towards auto and ancillaries, IT, and banking. Overall, the fund maintains a well-diversified portfolio across market caps, sectors, and geographies, and this strategy has worked well since inception. Next up is DSP Large and Midcap Fund. This fund was launched in May 2000 and follows a balanced approach, investing about 70% in steady compounders and around 30% in high-growth opportunities. It focuses on maintaining a margin of safety and ensures diversification across stocks and sectors to reduce concentration risk. The fund prefers companies with strong balance sheets and sustainable competitive advantages and holds them with a long-term perspective. Over the last 5 years, it has delivered a CAGR of 15%, slightly ahead of the Nifty Large Midcap 250 TRI index, which returned 14%. It has also outperformed the benchmark on a risk-adjusted return basis. As of February 2026, the allocation is 51.5% in large caps, 35.4% in mid caps, and 10% in small caps. Top holdings include ICICI Bank, HDFC Bank, and Axis Bank. Sector-wise, it is heavily tilted towards banking, followed by auto and ancillaries and finance. While the fund has seen some short-term underperformance at times, it has rewarded investors well over the long run through its diversified and growth-focused strategy. And finally, we have DSP Large Cap Fund. Launched in March 2003, this is a benchmark agnostic fund in the large cap category. It follows a blend of growth and value investing and maintains a relatively focused portfolio of around 30 stocks. The idea is to invest in companies with strong long-term growth potential, limited downside risk due to business quality, and attractive valuations. In the last 5 years, the fund has delivered a CAGR of 11.9%, outperforming the Nifty 100 TRI index, which returned 10.3%. It has also shown lower volatility and strong risk-adjusted returns. As of February 2026, the fund has about 79.7% in large caps, with smaller allocations to mid and small caps. Top holdings include HDFC Bank, ICICI Bank, and ITC. Sector allocation is led by banking, followed by auto and ancillaries and insurance. Although the fund faced challenges in the past due to changes in the fund management team, it has performed well in the recent market rallies, outperforming both its benchmark and peers through a high conviction approach. To sum it up, DSP Mutual Fund equity schemes have demonstrated strong historical performance and have consistently outperformed their benchmarks over the long term, while maintaining reasonable levels of risk. Their focus on diversification, quality businesses, and disciplined investing has helped them navigate different market cycles. However, do remember, past performance is not an indicator of future returns. Always ensure that any investment you choose aligns with your risk profile and financial goals. Be a thoughtful investor. For more guidance on mutual fund investing, subscribe to the Equitymaster YouTube channel. And as always, happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, enlistment as RA and IA with exchange, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.